Hi everybody, this is Trent Mell from First Cobalt. Wanted to give you a bit of a quarterly update on what's been an incredibly busy quarter for my team. It really started last December when we announced in the middle of the month a $10 million joint investment by the Canadian and Ontario governments into the refinery project. And then a few weeks later, as we rounded into January, we announced where our feed was going to be coming from. Notably, Glencore and IXM are going to be providing us with 5 years of feed. And I would argue those are two of the, if not probably the two best cobalt operations in the world from a sustainability and sourcing perspective. And it's a great overlay to our strategy of providing the world with the world's most sustainable cobalt. I think we can do that with our environmental footprint and the partners we've got. So with those two big items, I guess, out in the market, our stock doubled and then tripled. We were able to go out and raise $10 million. We had another $7 million in warrants that got accelerated, and that really helped us kick off the project. So Mark Trevisial and the project team started working away at some of the longer lead items, the procurement side of things, some detailed engineering, and just trying to chip away at that front end of the schedule so that as we get into construction later in the summer, we're not held up with equipment orders and the like. More recently, we've had three big pieces of news here in a matter of days. First, we retired our Glencore debt. Glencore is now a 4.8% shareholder, having repaid our $5 million US debt that they provided to us that really got the refinery story off the ground. And then on the heels of that, we announced a strategic partnership with Stratton Metals out of London, one of the world's biggest cobalt traders. They're going to work with us to help qualify our cobalt product, and they'll buy up to 100%, subject to us having the right over the next little while to place some of this directly with OEMs and battery makers. So a great partnership there that I'll tell you about in the months ahead. And now today, as I'm giving you this update, we announced that we've signed a mandate letter to go exclusive with a real credible lender. Really happy with the counterparty. Can't tell you who it is yet. We're in detailed diligence, trying to advance some technical diligence and ultimately documentation. So we'll have more for that in Q2 as that progresses. So where does that leave us? Let's look ahead to Q2. So next up, I guess, will be to formally sign the EPCM contract with Ausenco, who are frankly already on site, but we're nailing out the details, the schedule, and costs. Right now, I can tell you the way things have gone. We're still on budget. We're still on schedule. October 22 commissioning is what we've instructed the project team they should be targeting. We're doing a little bit of work, as you know, on black mass. That's going to be, that won't be October 22, but maybe not long after. There are a lot of producers of black mass. I think that feed is perfectly suited for our refinery. And at which point, it's no longer just the First Cobalt refinery, it's a battery materials refinery, because everything in the cathode, nickel, manganese, lithium, all of this stuff could be reported through our refinery. So some network going on. Don't expect news on that in the near term. I'd rather the team focus on the project, but it's an obvious destination for that material. It's growing in quantity across the continent. And then lastly, Iron Creek. Iron Creek, I love that asset. It's a cobalt copper deposit in America. Convinced it's going to continue to grow, and that too could be a source of feed for the refinery longer term. Again, just further increasing our reliance on a domestic feedstock and creating that sort of vertical integration opportunity for our investors. So I want to thank you for following us. Thank you for your patience. Be well, and I look forward to giving you more updates soon.